Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Tuesday, August the 17th, 2010, and like we do every night, it's time to look at the markets. Okay, let's start off looking at the Dow Jones Industrial Average. This average was up 100 or closed up 103 points for the day, was up closer to 175 intraday, so we'll look at that in a moment. Yesterday we told you this average had 5 consecutive days to the downside. 1, 2, 3, 4, 5. We expected a bounce. We got that today. We told you ahead of time the bounce was not something that was a quality buy opportunity. You didn't want to be trying to play that from the long side unless you were like a day trader or something like that. But a swing trader, they want to be looking for short opportunities out in the market and let the market bounces create new opportunities or better opportunities as opposed to trying to play the long side. And there's an easy way to test whether or not I was right or not, and that is to A, look at the candlestick formation, and B, look at the volume levels. Whenever you have a low volume situation, especially the extreme low situation that we have now, you know that smart money, those guys that have a lot of money, are not buying this market. So if they're not buying, then why? They don't see any opportunities out there, neither do I. On the long side, there's just not an opportunity out there. On the short side, it makes more sense to me. If you go to our website at perfectstockalert.com, we did an article, posted it on the blog there. It's 100% free. You can check it out, and it explains why the market is no longer a place for bulls. And it's a pretty good argument there, and something you didn't pay attention to. And today we can see that the candlestick formation, remember this is a 6-month chart, each candlestick is 1 day. This particular candlestick here, you see a nice advance up here to the middle Bollinger Band line, then bounce right off of it and close back below the 200-day moving average. Every time, let me get the tools out, every time we've bounced up here above this 200-day moving average, ever since we broke below it, we get shot down from it. It can't sustain those levels, okay? We play up above it, and we get knocked back down. We play above it, we get knocked back down. Here we tipped above it, we get knocked back down by the close. We can still see a little bump to the upside, but that's where you guys are going to be shorting. It's where your smart money is going to be shorting. We know this from another way as well. We have a particular item on our website called the MPT rating. It's designed by PerfectStockAlert.com, and it's only provided there, and it tells you what smart money is doing, whether they're buying or whether they're selling. And today was the first time we showed a big, fat, ugly sell signal from them. Back in this rally here, we told you it was unsustainable. We never saw smart money start shorting it. And in this particular case, we just saw that happen today. So not something that I want to be a buyer of. Definitely want to be looking for selling on this. And if you were long this market, I'd keep a really tight stop because there's no volume behind this advance here. And the candlestick formation is not showing any strength. Okay, let me show you what I'm talking about by that. You see this candle right here, okay? Yeah, you can see we advanced on this particular day and closed solid to the upside. That was a strong move to the upside. There's no selling there. There was no reason to back away. The candlestick itself was actually quite bullish, even though the overall trend was telling us this was going to hold. Either way, it was a very bullish move, and it continued for a couple of days before it started having problems. Even back here, in the last move to the upside was a big close to the upside. In this particular case, you don't have that. You have an advance and then back away before the close. That's because the guys are selling into the close. That's something you're going to see more and more develop as these trend breaks down more and more. So nothing bullish here. You could still see a couple more days to the upside, but I wouldn't count on those, and I'd be looking for opportunities to be into inverse ETFs or shorting overbought or overextended equities. That'd be the best calls in my opinion. One last item in case you're new following us, you haven't heard us provide the analysis of the 50-day moving average, this blue line here, or this 200-day moving average, this red line right here. If you haven't heard us discussing that, one thing to note is when you have a strong trend, you'll find support at the 50-day moving average. Once you start breaking below that, piercing it, and closing below it, you know there's a problem is developing. And you should still find support up on the 200-day moving average, but once you start breaking below that and closing below it, the 200-day moving average becomes resistance like we saw today. Also, the 50-day moving average will become resistance as well. So this little plane above it is actually short-lived, and it's going to end up, price activity is going to end up going lower and start finding resistance consistently at those key resistance levels. Okay, very important information there. I would use the market bounce obviously to find short opportunities, okay, or inverse ETFs. Okay, here we are looking at the NASDAQ. This is basically the same situation. We had a bounce today, and this bounce makes sense. It's filling this previous gap here, and we have a couple more above us, but again, inverted hammer on today's formation, not good. Finding resistance at the 50-day moving average, forming a gap below us, and the volume behind this move was horrible. Also, you still got a gap down here. Lots of telltale signals that this thing is not a good bounce to the upside. Don't fall for it. Look for short opportunities. A quick scroll down and look at the volume. You can see the buy volume is very, very weak. Yesterday's volume on Monday was the weakest we have seen in a year, and today was just slightly better than that. So there's no smart money behind this trading activity at all, and the only time you ever see an increase of volume is on the sell side. So smart money is looking for short opportunities. They do not believe in a market rally here, and knowing that third and fourth quarter earnings are not going to be good, there's no reason, there's no backstop for bulls. It's very dangerous to be a long trader on this market, and that's my biggest concern for everybody out there. If you don't have a really good reason to be going long, you need to think twice. Otherwise, you're going to get caught in the same situation back here where you were bouncing around to the upside and we kept warning you it's not going to hold, and then all of a sudden you gap down here and leave everybody who is long holding the bag. Okay, you don't want to be that guy again, so look for the short opportunities. That's the easy way to trade that. Quick look at the S&P 500. You've got a bounce here that we were expecting. Could see a couple more days to the upside, but the thing to note about this is you have a bear setup developing here. Let me show you what that is. Scroll on down. Let me get rid of that. Note the low points of this current price activity here at 10,056 and 1,056 and 1,069. It's showing an uptrend. At the same time, the low points of the RSI right here and here are showing a downtrend. This is known as a bear setup. That means when the market bounces up here, you want to be using that bounce as an entry opportunity for your shorts because she's going to break down. Okay, it's very simple, very effective method for analysis for everybody who's out there. Again, these charts are always kept on our website at perfectstockalert.com, 100% free website. You can always go check them out. They update every day with my notations on them and so forth and so on, as well as many charts that I don't cover every single day. So that's always good information for you there. Also, like I said, there's a really good article there on our blog discussing the new America that we have to deal with, the new economy, and it's going to be around for a long time. So you need to learn how to trade this market, this new market, and definitely good information there. If you've not been to our free website, it's perfectstockalert.com, 100% free. All we ask in return, refer a friend. And we'd appreciate you subscribing to our YouTube channel. That also helps support us and helps us stay free. We appreciate that. Thank you very much. Quick look at our disclaimer. Okay, you guys can read the disclaimer, and I'll make a couple of announcements. Today is the 17th. More than half of our August trading course is over. So anybody who pre-registers for next month on our website, you can have access to the rest of this month 100% free, as well as gain access to next month, which is quite cool. Also, you can see what I'm swing trading live right in front of you and why. We actually teach you how to read charts the way I do, and it's just free money just for the taking. You know, can't beat that. All right, God bless. Take care. Enjoy the evening, and I'll see you all tomorrow.